I think, I mean, that's like the best way to do things, because to your point, you can kind of create the terms that are beneficial for you and beneficial for the seller. And if he was like, hey, I need $2,200 a month, you're like, okay, that can work into the budget, and
Yeah.
it kind of works out for everybody.
Yeah,
Um,
and he did this crazy thing too, where we said we actually, I think we said we wanted a 5-year interest only, and he goes, well, why don't we do it 4-year interest only, and if you want to extend another 4 years, just pay the principal down $20,000. So we're like, wow, so we essentially have a potential of 8 years interest only on this park, and only have to come up
with
with
a
a
$20,000 hit.
twenty thousand
That's
dollar. Yeah,
yeah,
so there's no bank that would ever like even think about something like that.
right. Yeah, and that's an easy yes, please.
Yeah, right.
Yeah. So how is, Blue Elm Investments, where are you at now from like a portfolio standpoint? Are you only
Mhm.
in, the mobile home and RV park space, or have you kind of expanded out into other assets?
Yeah, I've expanded into other assets. My current portfolio is the park in Arkansas, my RV park in Bandera. And then earlier this year, I started working on the fund of funds model, where I was trying to look for great sponsors to work with who had, in-house construction, property management, asset management, where I could partner along with them and, bring different kinds of deals to my investors
Yep.
with much bigger operators. So did that for a couple apartments in the Dallas Fort Worth market earlier this year, and actually did one last year for Carolina's portfolio with another group. So yeah, so that's been actually great, because it's nice to be able to bring new deals to my investors that they wouldn't find out about otherwise, because I'm coming in as a large LP into those deals. I can offer better terms to my investors than they would get if they just went to them directly.
Got it. And the fund of funds model, do you have to be an accredited investor to invest, or how do you structure that fund of funds?
Yeah, well, with like the two Dallas deals I did this year, that operator in particular offers their deals to accredited and non-accredited. So
Okay.
my fund had to kind of fall in line with them.
Got it.
So, good and bad side to that. The downside is I can't just advertise broadly about the deal. The good side to that is, I did 506B to allow non-accredited investors for my first deals, like the one in Georgia, for example. And I was
Yep.
working with people who maybe they were making $150,000 a year as an engineer and had a $800,000 net worth. So they were like, smart, intelligent investors, and
Yep.
but didn't meet the sort of, kind of false standards of SEC accreditation. And I wanted to give them access to these opportunities. So that's the good side about offering, having investment opportunities to open to non-accredited investors.
Yeah, the guidelines, meaning you make a certain amount of money or you have a certain net worth, just means that yes, you've got the cushion to absorb a bad deal. That doesn't mean you're a smart enough investor to understand what you're investing in. I always was fascinated by the rules that made you accredited or non-accredited. It's a dollar. Like you can make 990. Are you $999,000 net worth, or are you a million? And oh, now you're accredited. So
Right. Or you could have a brokerage statement and be like, oh, I was accredited yesterday, but oh, stock market
well,
went down 5%, so I'm not accredited
that's
anymore.
right.
Right.
That's right. It's like by the whims of the stock market, you're either accredited or not accredited. Fascinating, but and so your kind of short, medium, long term plan, is it to, you kind of obviously just started a new job, and hopefully your bosses are listening
Mm.
to this, but are you kind of trying to, continue to stay in the W-2 world, or would you ultimately like to shift and have, real estate be your full-time gig and raise money in your fund of funds, go out and find other deals? Like what's that kind of look like for you?
Yeah, well, yeah, I did tell my new boss that, I still had this real estate business that I'm working on that takes less time in a fund of funds model, which is another reason for that transition is that,
Yeah.
when you're kind of actively operating deals, it takes a lot of time. And I'm still, I still have a couple deals that I'm active in that I have to give attention to, because those deals need it, and my investors are relying on that.
Right.
Um, so I'm going to continue to do this on the side but still kind of working on that fund of funds model. And, and that from my standpoint takes trying to look and talk to and meet good operators, like in good markets, in the, in asset classes that I think would be interesting to my investors. So I'm still actively doing that now. I probably have, 7 or 8 people I'm talking to kind of in a variety of asset classes, variety of markets, that I hope will be interesting offerings for my investors probably early next year.
Yeah.